Welcome to Iraqi Dinar News, where you receive real and authentic updates about the Iraqi Dinar. If you want to stay informed with moment-by-moment developments, make sure to subscribe to the channel and like the video. Today's discussion centers around an important concept that has been increasingly mentioned in economic circles surrounding Iraq: the real effective exchange rate, often referred to as REER. The statement we're analyzing suggests that the stage is set for movement in this area, highlighting digital tools, non-oil growth, and structural readiness. It also points to the idea that Iraq may simply be waiting for a prudent time frame before transitioning into its next phase. Let's unpack this carefully and analytically. First, when we talk about the real effective exchange rate, we are referring to a measure that adjusts a country's currency value against a basket of other currencies, taking into account inflation differentials. It's not just about the nominal rate you see quoted against the US dollar. Instead, it reflects the broader competitiveness of an economy. For Iraq, this is particularly relevant because the country has historically operated under a managed exchange rate framework overseen by the Central Bank of Iraq. For years, the Iraqi dinar has been stabilized through foreign currency auctions and tight liquidity controls. These policies were designed to maintain price stability, limit inflation, and protect foreign reserves. Recently, however, Iraq has been undergoing structural reforms that may allow for more flexibility in the exchange rate over time. That's where discussions about REER begin to gain relevance. The news paragraph claims that the stage is set for a real effective exchange rate transition. That's a strong statement. To assess it responsibly, we need to look at whether Iraq has made progress in the underlying pillars that would justify such a shift. One of those pillars is digital infrastructure. Iraq has been steadily expanding its financial digitization efforts. The government and the central bank have pushed electronic payment systems, expanded point-of-sale networks, encouraged salary digitalization, and worked to reduce cash-based transactions. This shift is not just cosmetic. Digital payment infrastructure enhances transparency, reduces illicit currency demand, and strengthens monetary transmission mechanisms. When a central bank can better monitor money flows and liquidity conditions, it gains greater confidence in managing exchange rate policy. In the case of Iraq, reducing reliance on physical US dollars inside the domestic market has been a major reform objective. Stronger digital tracking supports compliance with international banking standards, which in turn stabilizes cross-border transactions. That brings us to another key factor mentioned in the paragraph: non-oil growth. Historically, Iraq's economy has been heavily dependent on oil exports. Oil revenues account for the overwhelming majority of government income and foreign exchange reserves. This creates vulnerability. When oil prices fall, fiscal pressure rises, reserves can decline, and currency stability may come under strain. However, in recent years, Iraq has attempted to diversify its economic base. Agriculture, construction, telecommunications, logistics, and domestic manufacturing have shown incremental growth. While oil still dominates, non-oil GDP expansion is a positive structural sign. A currency backed solely by one commodity is inherently exposed to global volatility. A currency supported by multiple sectors has greater resilience. If non-oil growth continues to strengthen, it supports the argument that Iraq's economy is becoming more balanced. That balance is essential if policymakers are considering recalibrating how the dinar is valued relative to trading partners. Now, it is important to clarify something. When commentators say it's complete or everything is in place, that does not necessarily mean an immediate exchange rate adjustment is imminent. Economic transitions are rarely flipped like a switch. Instead, central banks often prepare quietly, building reserves, adjusting liquidity tools, strengthening compliance systems, and coordinating with fiscal authorities. The reference to waiting for a prudent time frame is actually the most responsible part of the statement. Timing is critical in currency management. A shift in exchange rate policy, whether toward greater flexibility or toward a recalibrated rate, must align with macroeconomic stability. Let's consider the current macroeconomic environment. Iraq's foreign exchange reserves remain relatively strong compared to previous crisis periods. Oil revenues have provided support, and the central bank has maintained a stable official rate while addressing parallel market pressures. Inflation, although influenced by imported goods and global supply chain conditions, has been contained relative to hyperinflation scenarios seen in other developing economies. However, Iraq still faces challenges: political stability, government formation timelines, fiscal discipline, and regional security conditions all influence investor confidence. Exchange rate adjustments in politically uncertain environments can introduce volatility rather than stability. This is why central banks often wait for what they consider an optimal window. That window may include low inflation, steady oil prices, manageable fiscal deficits, and minimal speculative pressure. If Iraq is indeed positioning itself for the next phase, it would likely prefer a calm macro backdrop rather than a turbulent one. Another factor worth analyzing is Iraq's relationship with international financial institutions and global banking systems. Over the past several years, Iraq has worked to strengthen compliance with global anti-money laundering standards and to improve transparency in dollar transactions. Cooperation with international partners has been essential in restoring credibility to cross-border transfers. A stronger compliance framework reduces the gap between official and parallel market exchange rates. When that gap narrows, it signals that policy measures are working. A smaller spread indicates improved confidence in the official rate, which is a prerequisite for any broader REER alignment. Now let's discuss what this means for Iraqi Dinar followers. In the short term, structural readiness does not necessarily equal immediate rate movement. The dinar remains under a managed regime. The central bank prioritizes stability over rapid appreciation. Short-term implications are more likely to involve continued digitization, tighter liquidity management, and incremental reforms rather than dramatic currency shifts. Investors and observers should also understand that REER adjustments are often technical recalibrations rather than headline-grabbing revaluations. Real effective exchange rate alignment may involve gradual adjustments over time, influenced by inflation differentials and trade competitiveness, rather than a sudden, large-scale currency change. In the medium term, however, continued progress in digital payments and non-oil sector growth strengthens the dinar's structural foundation. A diversified economy reduces reliance on oil cycles. A digitized financial system improves transparency and policy control. These are long-term positives for currency stability. The phrase, "closer than we've ever seen before," reflects optimism. But optimism must be balanced with institutional reality. Central banks operate conservatively. They value predictability and credibility above speed. If Iraq is indeed approaching a new phase in its monetary framework, it will likely unfold in carefully sequenced steps rather than overnight. Let's also consider the geopolitical dimension. Iraq sits at the intersection of regional trade routes and energy markets. Stability in cross-border commerce, integration with neighboring economies, and normalized banking relations all contribute to exchange rate sustainability. A country cannot operate an effective real exchange rate model in isolation. Trade flows, remittances, foreign investment, and capital controls all matter. If Iraq continues strengthening trade ties and improving customs efficiency, it enhances the real competitiveness of its currency. That's what REER ultimately measures: competitiveness adjusted for inflation and trade relationships. Long term, if non-oil exports expand and domestic production replaces imports, demand for foreign currency could gradually ease. Lower structural demand for US dollars would reduce pressure on the dinar. That dynamic supports gradual currency stabilization rather than abrupt appreciation. It is also essential to recognize that currency strength is not always synonymous with economic health. A currency that appreciates too quickly can hurt exports. Policymakers aim for balance. They seek a rate that supports domestic purchasing power while maintaining competitiveness abroad. Therefore, any discussion of the next phase should focus less on speculative rate targets and more on institutional readiness. Iraq's readiness includes reserve adequacy, fiscal coordination between the Ministry of Finance and the central bank, digital modernization, compliance standards, and sectoral diversification. From a policy standpoint, Iraq's trajectory does appear more structured today than in past years marked by volatility and currency pressures. That alone represents progress. But progress does not eliminate risk. Oil price fluctuations, global monetary tightening, or domestic political gridlock could still alter timelines. For followers of the Iraqi Dinar, the key takeaway is this: structural reforms are foundational. Digital tools and non-oil growth are not hype, they are measurable economic variables. If sustained, they support long-term currency credibility. However, prudent timing and macroeconomic coordination will ultimately determine when and how any REER-related adjustment materializes. In conclusion, the current environment suggests that Iraq is laying groundwork rather than triggering immediate change. The infrastructure appears stronger, the financial monitoring systems are more advanced, and economic diversification efforts are underway. These factors collectively improve the structural outlook for the dinar. But responsible analysis requires patience. Monetary evolution is a process, not an event. While the next phase may indeed be closer than before, it will likely unfold in alignment with stability, compliance, and macroeconomic balance rather than speculation. As always, stay focused on fundamentals rather than rumors. Sustainable currency value is built on economic productivity, institutional strength, and disciplined policy. If you appreciate balanced and responsible Iraqi dinar analysis, make sure to subscribe and stay connected for factual updates. And remember, this content is provided for informational purposes only and should not be considered financial advice.